Right now, Bitcoin is hovering around 118,000, and it's not random. Three massive forces are colliding. A major policy shift in the US, a new clear rulebook from Europe, and a flood of Wall Street cash that's changing the game.
Hi, I'm Mai. Today we're going to break down the financial tidal waves that can make you rich or wipe you out.
First, we'll break down the US regulatory earthquake. Then, we'll see how Europe's new rules are attracting billions. And finally, we'll follow the money, including a massive $60 billion forecast from JPMorgan. By the end, you'll separate the signal from the noise. Let's dive in.
The regulatory earthquake. The American Wild West gets new rule.
For years, the US government and crypto were at war. But in 2025, that changed. The administration signaled a friendlier approach, less like a strict referee, more like a coach. This shift was the green light Wall Street needed. The biggest move was the Guiding and Establishing National Innovation for U.S. Stablecoins Act, or GENIUS Act, passed on July 18, 2025.
This is America's first major crypto law, creating a clear rulebook for stable coins.
It mandates that digital dollars be backed one-to-one by real dollars in a bank, building essential trust for big institutions. It also requires anti-money laundering compliance, a deal breaker for institutional investors.
Europe's playbook. How MiCA changed everything.
Meanwhile, Europe made a huge move with its markets in crypto assets regulation, or MiCA. As of 2025, MiCA provides a single set of rules for all 27 EU countries, delivering what the market craved: clarity. Think of it as one highway code for the entire continent, professionalizing the industry and boosting investor confidence. MiCA immediately became a magnet for institutional money. Big firms hate uncertainty, and these new rules gave them the legal safety they required. This sets up a global competition.
We've covered the new rules in the US and Europe. Before we get to the biggest force, the institutional money, if you're getting value, hit that subscribe button and turn on notifications.
America's innovation versus Europe's stability. In a market this fast, you can't get left behind. Now let's follow the money.
Institutional tidal wave. Wall Street goes ALLIN.
If regulations built the highway, institutional cash is the fleet of monster trucks now roaring down it. JPMorgan confirms this, forecasting a $60 billion surge into crypto this year alone. We're talking about pension funds and major corporations, whose compliance teams finally got the green light from the new rules. And it's not just about Bitcoin. A recent Coinbase and EY Parthenon survey shows 83% of institutional investors are increasing their crypto holdings this year. Nearly 60% are aiming to allocate over 5% of their total assets. They see Bitcoin as digital gold, but are also buying Ethereum and Solana as high-growth tech plays. Their entry point? Regulated products like ETFs. Spot Bitcoin ETFs were a game changer. Now spot Ethereum ETFs are here, recently pulling in $1.85 billion in a single week. Expect ETFs for assets like Solana to follow soon.
Technical analysis. What the charts are telling us right now. So that's the why. Now for the charts.
Bitcoin is consolidating around 118,000 after its all-time high, near 123,000. This is a healthy sign, suggesting the market is building a base for its next leg up. Let's talk key levels. Strong support, the floor for buyers, is between $112,000 and $115,000. Staying above that is bullish. The resistance ceiling is the all-time high of $123,000. A break above that could open the door to $130,000 and beyond. Finally, the Crypto Fear and Greed Index is at 67, indicating greed. This shows market confidence, but also serves as a warning for a potential pullback. Stay cautious.
In conclusion, so to recap, Bitcoin's price is being driven by three global forces: a pro-crypto shift in the US, Europe's new regulatory clarity, and the resulting tidal wave of institutional money.
The outlook is bullish, with analyst targets for 2025 ranging from $135,000 up to $330,000.
My question for you is, which of these forces, US policy, European rules, or Wall Street cash, will be the biggest driver?
Drop your answer in the comments.
If you found this valuable, slam that subscribe button and hit the notification bell. The market never sleeps, and neither do we. Thanks for watching.